$580 million in oil futures changed hands in a single minute. 15 minutes later, President Trump announced the U.S. had been in, quote, productive conversations with Iran. Oil crashed. Stocks surged. Whoever placed those trades made a fortune before the rest of the world even knew what was happening. A market that can't decide. Wall Street spent Tuesday drifting. The S&P 500 slipped 0.4%. The Nasdaq fell harder, down 0.8%, dragged by software names after reports that Amazon is building AI agent tools that could automate sales and business development functions. Oracle dropped 4.3%. The Dow held up better, shedding just 0.2%. The session's indecision told a bigger story. Monday's 631-point Dow rally, fueled by Trump's claim of Iranian talks, ran straight into Iran's denial that any negotiations had taken place. Parliament Speaker Ghalibaf called it fake news, designed to manipulate the financial and oil markets. Brent crude, which had plunged over 13% on Monday, clawed back toward $97 to $100 on the denial. The DXY dollar index drifted near 99.5. The 10-year yield ticked to 4.39%. The VIX sat at 26.15, elevated, but nowhere near the 40 that Jeff Gundlach says would signal a genuine washout. Beneath the surface, the damage was spreading to unexpected corners. Fertilizer prices at U.S. ports have surged nearly 30% since the war began, threatening a $10.4 trillion agricultural sector that supports 48 million jobs. A third of global fertilizer supply used to pass through the Strait of Hormuz. That supply is now stranded. Spring planting season is weeks away. And then there was this. Bank of America data showed Gen Z had just started spending again for the first time in years. Rents cooled. Wages outpaced housing costs. The youngest generation was finally breathing. Then gas prices jumped 26% year over year. BofA economists warned the recovery could be, quote, snuffed out before it fully takes hold. For every dollar Gen Z spends on discretionary items, a larger share now goes to the pump than for any other generation. But none of that was the day's real story. The 60-second fortune. Between 6:49 and 6:50 a.m. New York time on Monday, someone sold roughly 6,200 Brent and WTI futures contracts. At 7:04 a.m., Trump posted on Truth Social that the U.S. had been engaged in productive conversations with Iran. Oil plummeted. S&P 500 futures spiked moments later. The timing is almost too clean. Nobel laureate Paul Krugman called it what he saw. We have another word for situations in which people with access to confidential information regarding national security exploit that information for profit, he wrote on Substack Tuesday. That word is treason. Oil analyst Rory Johnston told Fortune the pattern has been hard to ignore. Everyone, every analyst, every oil trader, has been questioning downward pressure on prices. Whether or not there was direct manipulation, the administration's jawboning has spooked participants out of trading, where physical fundamentals would push prices. The market is no longer pricing oil. It's pricing tweets. Krugman raised a darker possibility. If someone is trading on advanced knowledge of national security decisions, that effectively broadcasts government plans to foreign adversaries through futures markets. Who needs to bribe agents within the government when you can read the intelligence from a Bloomberg terminal? Then he asked the question no one in Washington wants to answer. Are decisions about war and peace in part serving the cause of market manipulation rather than the national interest? This isn't without precedent. In 2020, senators faced insider trading investigations after selling stocks before pandemic lockdowns were announced. But the scale is different. Those were portfolio adjustments over days. This was $580 million in 60 seconds on instruments directly tied to the policy announcement. There's one complication. Iran denies the talks ever happened. If Tehran is telling the truth, the trades weren't based on leaked negotiations. They were based on a leak that Trump was about to claim negotiations existed. The distinction matters legally, but not financially. The profit is the same either way. What the futures already knew. Gundlach wants VIX at 40 before he buys the dip. Morgan Stanley sees 7% more downside. Goldman warns of a deeper correction. But none of them are pricing in the possibility that the market's biggest moves are being front-run by someone with a direct line to the White House. If Monday's oil futures trades were indeed insider activity, the implications go beyond one trade. Every future Trump announcement about Iran, every escalation, every de-escalation, becomes a potential information asymmetry event. Traders who play by the rules are structurally disadvantaged. Price discovery breaks down. The market stops being a market and starts being a mechanism for transferring wealth from the uninformed to the informed. The CFTC has the authority to investigate. Whether it will is another question. The Commission has been operating with a reduced staff since January, and its acting chair was appointed by the same administration whose announcements preceded the trades. Watch one number. The ratio of unusual options activity to presidential social media posts on Iran. If the pattern repeats, large directional bets placed minutes before policy announcements, it won't matter whether anyone calls it treason. The market will have already rendered its verdict by refusing to trust the price of oil.